Banks and bankers today find themselves in interesting times. Loan demand has been strong over the past year, regulatory relief has been meaningful, and many bankers and boards report a more positive operating environment than has been experienced in well over a decade. But the industry faces potential headwinds as well, with expectations that the Federal Reserve will continue raising interest rates in 2019, along with a recent decline in bank stock prices. With that backdrop, let's consider the impact of these external factors on bank acquisitions today, as measured by Bank Director's 2019 Bank M&A Survey. Crowe was again pleased to partner with Bank Director to gain insights from board members and bank executives into the bank M&A environment and the industry in general. The first primary observation is that few banks want to sell, but many see themselves as potential acquirers. The majority of survey respondents say they are open to acquisitions but prefer to focus on organic growth. Yet more than half believe they're likely to acquire another bank by the end of 2019. The economic opportunities and positive regulatory environment are fueling industry optimism and likely the reason why most respondents prefer organic growth to bank M&A. They aren't opposed to doing an acquisition but recognize that bank M&A is tricky to execute, and it's becoming even more difficult to find a suitable bank to acquire. In fact, 39% say there aren't a sufficient number of viable acquisition targets in their markets. The combination of tax relief, regulatory reform, and a strong economy has made many banks more optimistic, which suggests it's unlikely many will sell. And those that do will expect a high price for their bank. With fewer banks interested in selling, prospective acquirers should develop strong criteria for what they are seeking in an acquisition target. Successful acquirers have well-defined strategies and know how to differentiate between targets to find the potential candidates that will lead to a successful merger. In our survey, bank executives and directors shared what they value in a target, which could indicate some of the factors that could drive a higher price. The target's deposit base is the most highly sought-out value driver, according to 71% of the respondents. Closely related to a favorable deposit base are branch locations. 53% of those surveyed indicate that branch locations in attractive, growing markets are highly prized. Finally, almost half say they highly value a lending team or talented lenders in a target. Based on my own conversations with bankers, local banks in markets where a competitor has been sold see the disruption that acquisitions create as an opportunity to acquire talented lending teams and core deposits without having to pay a purchase premium. One bank's acquisitions is sometimes another bank's organic growth opportunity. How will all of this optimism from bankers affect the outlook for 2019? To begin, though 2018 was a strong year for the economy, the outlook is tempered a bit for 2019. More than 3/4 of respondents believe the U.S. economy will experience modest growth through 2019, which is consistent with recent forecasts from leading economists. Even moderate economic growth will likely lead to continued organic growth, indicating sustained economic tailwinds for the industry. In considering the regulatory environment, most of the bankers who responded to the survey believe President Trump has appointed bank-friendly regulators, which has had a positive impact on the industry. But there are looming uncertainties for banks in 2019. Preeminent among these strategic risks are the impact of global trade issues and political strife. While the Dow Jones Industrial Average is well up from pre-2017 levels, the latter half of 2018 did experience frequent volatility and an overall slide in the index's value. As the picture becomes clearer on trade and international relations, some of the volatility will subside. However, the stock market will be negatively impacted by continued increases in interest rates. The price decline for bank stocks has had a negative impact on bank M&A. As buyer stock prices have fallen, so has the overall volume. In the first half of 2018, the volume was strong, based on a stellar second quarter. But since then, the volume has declined. While 2018 was pretty consistent with 2017 volumes, the trends indicate that bank M&A will likely be at lower levels in 2019. Bankers believe they have a favorable regulatory and economic environment and profits are at high levels thanks to tax reform and economic growth. As the survey indicates, organic growth is the primary strategic initiative for most banks, even if they are open to bank M&A. The rub has always been the lack of sellers. This trend will likely continue in 2019. Visit bankdirector.com for the complete results of the 2019 Bank M&A Survey and read an in-depth analysis in the first quarter 2019 issue of Bank Director magazine.